exciting notes. All right, looks like we are live. There it is. Okay, well, good morning, everybody. Welcome back to another week in the overall equities markets. Welcome back to Engineering the Markets. My name is Jared, and it is August 22nd, 2022. I appreciate all of the kind wishes on my trip last week. Definitely appreciate the memes that were generated, but we're back at home office. We're looking to kind of settle back into our normal routine. And ultimately, let's look at what the S&Ps did over the past week. There's a lot of sort of new information for us to gather and ascertain. We're also seeing the beginnings of our full reversal that we spotted last week. And that, of course, is starting to take hold this morning with a fresh gap down open in the S&Ps. So for the moment, let's start off with our S&P expected move. And the reason I want to call that out more for last week is even though the market did pull back in, remember that we were a bit elevated going into Tuesday. So while the S&P did drop back down, the market was pricing about a $76 expected move. That was our weekly reading for the S&P. And what we saw last week, while I don't have it fully marked, is about 76 points from high to low. It's not to say that this is the right area to mark these prices from. You don't necessarily want to be marking from just swing highs and swing lows, but the market did draw back in this case, about 108 points. And we still didn't quite tag that lower bound of the expected move. If you're measuring more from previous Friday's close, which is where you're supposed to be measuring from, you'll see that the market really only pulled back about 61 points from last Friday's close, or the prior Friday's close, the one before last week. So overall, this drawdown is not very significant at the moment. It's fairly normal, and at least within the expected move world, it's actually within bounds. We didn't even test the lower bound, which was about 42.04, and that would have been that full 76 points of price movement. So S&Ps were able to kind of hang in within this expected move last week. However, we are seeing a lot of our volume and monthly expiration cycle coming into the market dynamic. And that occurred last week with things like volatility futures rolling into new contracts, along with the SPX having its monthly expiration. Forgive me. A little bit of a sinus drip this morning, so we'll kind of power through it. Shifting into this week, we're seeing some of that volatility come into the new expected move, and the market's pricing approximately an 82-point expected move from high to low. We're seeing last week's close at approximately 42.28, and that coincides with that approximately 60-point drop. We pulled down to about 60 points. We closed a little bit higher, and with that particular close, it puts our highs and lows at 43.11 and 41.46 for the SPX. Now, some notable things about these price levels. For one, you'll notice that even if the market were to test its upper bound, the price activity here will still not necessarily be making a new swing high. Depending on how we test and sort of the overall look of the next couple of price candles, even if we get up to this particular range, we're still not necessarily breaching our swing high. So that's a notable target for the SPX, even if we see a more bullish week. I would say that I would not necessarily be shooting for another large extension this week, simply because it's not really priced into this particular series, along with the fact that most of this move here was actually an expansion from a previous balance range. So it had a lot of energy being released out of it. And that, of course, can drive price activity. Just having your bullish play kind of peter out or start to basically exhaust itself, along with your shorts starting to cover. And all of that energy tends to be released in some sort of 2 times of the range, or just some range expansion kind of play. So when it comes to our downside target, I think this one's a bit more interesting. The reason being is right now the bears have control. They've reclaimed the short-term momentum. They've also reclaimed arguably the daily downtrend if you're analyzing each and every candle. We do have a very mild lower high kind of formation, and we have lost the 3-day rally in terms of price activity. So we have essentially a full back test area to consider before seeing more downside. 41.46, however, is interesting, more so from the structural area that we broke out from. This was the area that was in place before the CPI data was released. You'll note that a lot of times when the market comes into some of those higher volatility price levels, they will have stronger relative reactions. And it's also indicative to kind of keep the market in line with what was the price at that point in time. So you think about the market's risk tolerance during, after, and then in the future around these price levels. You can often see whether or not a price level is more bullish or bearish depending on what happens in your current time frame. This is usually the idea behind technical analysis. If a lot of participants basically bought the CPI and were able to move higher in the S&P, the question is, were they selling into this relative high, or are we actually seeing the market put up a little bit more of a false look, an expansion look that ultimately has more downside once it gets rejected? So these are some things we'll kind of cover this week, along with our normal analysis and overall ideas for intraday trade. So another thing we covered last week, and I wanted just to kind of briefly discuss it a bit more, is the high correlation to some of the price activity and also some of the percentage movement in regards to comparing the current S&P to 2007 and 2008's bear market structure. And what we did specifically near the end of that discussion was we talked very heavily about this 200-day moving average. The reason being is, if you look back in 2008, one of the larger bear market rallies happened to reject at this particular moving average. It also rejected roughly where you'd expect, at some sort of trending resistance point, connecting previous swing highs and ultimately just forming a zone of resistance. So a lot of these areas in the market, they don't necessarily work simply because they're meant to. It's mostly about a lot of human and somewhat algorithmic participation agreeing that this is where you sell, this is where you buy, this is where you hold. Certain areas of the market tend to have that characteristic, and while this is not necessarily an exact science, you'll note that no one's ever perfect in this game. What we're seeing right now is a very high risk area to be along. You'll note that the market not only put up that rejection, but the downside here is much more significant than we've seen over the past couple of weeks. Most of our pullbacks have either been bought very quickly, or they've just been structurally where you're supposed to buy, something like a range breakout with a back test. And pretty much every other decline over this rally has been very mild. Short term, typically 1 to 2 days, and not even any sort of significant breach of trend, even on the shorter time frames. You'll note that the hourly uptrend remained fairly intact throughout most of this move, except for what's happening now. And this was kind of a call out last week as well. We talked about what are some targets. If you're still a short-term trader, you might still have short-term targets. These are perfectly acceptable because no one really knows what's going to happen once the target is met. And one thing we called out last week is if you started to get short the market where you're supposed to, basically on this rejection, or something as simple as a trend reversal on the hourly, once the trend is actually breaking bearish, what were your targets? And ultimately, the 200 period on the hourly was the strongest pullback level that we had. It was where this rally ultimately started once we got out of our sort of lower bound ranges. And it's where the market continued to test if the trend was still intact. You'll notice what's happening this morning. Not only did we achieve that target on Friday, so anyone who is carrying a net short position based around the rejection point and based around the trend line resistance, target was met. Fortunately, if you're still holding a short position, or maybe you've hedged into the potential of this being a little bit of a deeper retracement, you'll notice that the market's offering a little bit more downside. So that's certainly, advantageous as a short-term trader. You're able to flop back and forth into the market. Apologies, turn my vibration down. So you're able to transition long, short, basically looking for where to profit take, even if the market continues lower. And that's ultimately the game. This is what we're doing as traders. No one knew on Friday that we were going to break lower. We ultimately hit target. So if you were a bear, taking profit there was acceptable if that was your plan going into this particular short. This was a high to low short move, and ultimately it's been achieved. We're seeing more, and we'll see how much more the market wants to give. Now, a couple things we can start to do now that our trending structure is breaking down. First off, we can start to say, okay, well, how far can we expect this retracement to go? It's a very strong move in the market. Overall, we don't necessarily at this time expect the bears to the bulls to give back everything. Even though there's that high correlation coefficient to 2007, 2008, this is a whole new market. We're not necessarily going to be looking for a swing low back below 362, not at this time. You can certainly play towards it, but it's going to take months to possibly form. Instead, as shorter term traders, let's look at where this market has likelihood to pull back in. And for that, we're simply going to use the same tools that we've always used. Let's look at fibs. Let's assume that the trend for this moment is over. We've lost uptrending structure. We've broken the 200 period on the hourly. So certain trends have broken down. They're either bearish or they're starting to break overall. Where can we expect some of this drawdown to go? Well, first things first, we're very extended from our key moving averages. Something like even the 20 period on the daily is still about 5 to 6 S&P points away from the current price. Even in this gap down open, it's still fairly far removed from our first trending or momentum style moving averages. We can bring up maybe shorter term moving averages as well. Moving average, just to have that as kind of some context. I'll leave it as a 9. This is what a lot of our intraday traders are using. You want to be thinking about like 9 and 20, and we'll make this one very, let's make this one orange, but it's a little highlighted. So no matter what you're seeing here, you're seeing the market kind of pull back in. If the momentum was still in the bulls' favor, it's notable here that the bulls should be able to reclaim the 9. They've broken through it on Friday. And if they can't reclaim this candle by today, then ultimately they've lost this momentum moving average, which has held the price ever since we started to rally. You'll notice one test here and a reconnection here throughout the rally. So far that was a decent moving average to buy the dip. We've lost it, or we're breaking it at this point. The bulls would have to reclaim today. So let's assume that they can't. Market can easily pull back into something like the 20 period. Now, is the 20 period important at this point in time? Yes and no. It tends to be a very important moving average in general. However, it is not relevant to the current rally. The S&P really didn't connect to this rally throughout these extensions. The only time you see any sort of bullish intent with the 20 was when the rally started off the lows. So it's a more speculative area for the market to hold support. And it's also very speculative to assume that the S&P is going to go higher once we test that area. However, I would be looking at that as your first opportunity to counter this retracement. There's a couple of reasons why. One tends to be where the first line of defense is. If there are bulls who are looking more at a structural support as opposed to a momentum support, they're likely going to be lying in wait somewhere near the 20. Secondly, if we do pull back in that to that point, the market really has only retraced about 23, 25% of this move. And I'm marking off of this low simply because it's where the rally started. You can argue that there is a deeper low, and you can look at those retracement levels as well. Either or, you're going to see anywhere from about a 23% to, in the case of the lower retracement, or sorry, the lower price, it's actually not even going to be that much. You know, we'll hit 23% pretty much at the same time as the S&P hits the 20 period moving average. So these levels, I believe, are going to be important. They also have confluence. You know, we've discussed this a couple of times, so it should be no surprise. This area of the S&P is of critical importance. It is, once again, our balance range. It was established in late May to early June, and the market respected it for 6 to 7 trading sessions. It's the same price area that we're familiar with, which means the levels are exactly the same. Those levels have not changed. They've simply been assessed. The market has touched, tested, broken from, and rejected those levels, just like it's meant to do. So from a TA perspective, the S&P already has price levels that you are anticipating certain sorts of participants to do actions at, basically to respond. However, I will say that what's a little risky about this zone on the current breakout is the fact that we gapped outside of it. So the market was clearing this balance range at the time of the CPI data announcement. And when we cleared it, we left a structural gap in our wake. Now, the gap at the time was a breakaway gap. That's how it's meant to be determined, simply because the S&P advanced from that point. There was no reason to think otherwise. The S&P had a catalyst, and the market moved higher. So anyone who tried to short back into that gap would have had a little bit of trouble until this point in time. They basically weren't at a great price if they shorted immediately. As we are pulling back into these levels, this gap provides a little bit of, I would say, pause and maybe caution. Buying the dip in this area still could easily lead to a full gap fill. And if that does come to fruition, it would be good to know your gap levels. So in this case, we'll say that the S&P closed at 411.35, and then we opened back up at about 418.78. We did draw down about $2 during that session, and that kind of puts up a partial gap fill. Excuse me. Let me see if I can recover here. Yeah, so we put up a partial gap fill, but technically this gap is still left unfilled. So while it is a breakaway gap, breakaway gaps are not necessarily supposed to be fully filled. You know, the market should leave them open for considerable amounts of time. Given that we're close to these price levels, it's a poor structural area for relative support. And what you'll notice is, as we're kind of like facilitating these pullback levels, this is the type of analysis we can be doing to ascertain what the current risk tolerance of the market looks like as we get to them. So we have fib levels where we expect participation. You could also argue that even if we pull back about 38%, and this, you know, once again is off the low at this point, so the deepest low to the deepest high, or the deepest low to the most elevated high. Even if we pull back 38%, it brings the S&P down to 405. That's not a significant retracement from fib analysis. It tends to be where longer term bull or bear flags tend to form, some of the structural continuation plays. So if you believe this market has continuation, you still may have to deal with something like this type of retracement. And if the market were to go much lower, something like breaking back below 400, the likelihood is that we'll enter into a period of equilibrium where these highs and lows will be set for quite a long period of time, as the market usually will trade in shorter term structures. Usually some fractal type patterns will start to form. So really, as the S&P is pulling back in, what you're looking for is your intraday targets. What levels are important because the S&P is around them, or your particular candidate stock is around those prices. Where do you expect new participation to come in? Something like a big intraday rally. I wouldn't really expect that to happen until something like the 200 catch, or the 20 catches up. That allows for those bulls to actually enter into trade and force an intraday reversal. And then finally, what is your game plan if the market pulls back deeper? Because right now we're still a bit elevated. All we're seeing right now is the beginning of a possible pullback. And this pullback has potential to turn into a full 50%, 38%, or just even, you know, in the case of the worst bearish scenario, we could give this entire rally back. It's important to note, though, where we're doing it, why it's happening, and some of the correlation that we've had to previous bear market rallies. Of course, we'll see whether this turns into a new dip buying opportunity very soon. Sorry, as the S&P continues to pull back. So for this point in time, I think this will be enough for now. We'll look at where we're opening this morning. You know, we're definitely getting close to those particular price levels. Keep that sort of zone of buying support in the back of your mind. Market might represent itself bearish early, but ultimately, if the market wants to continue to kind of hold elevated, we should see a bullish response fairly soon. Coming into the 20, you know, if the market truly is in a more dip buying mode, we should see a little bit of risk assessment back into things like corporate debt, you know, just looking more at the big picture, what's starting to pull back. We're seeing corporate debt pull back, HYG. And we should also see things like our volatility come back off. Right now it's elevating. We definitely don't want to be too early, but keep in mind that the market can shift very quickly. And this is a very strong rally to give back immediately. We'll be looking more for some dip buying trades in the next couple of sessions, along with some of the risk profile if the market wants to continue selling. That gap is one of those areas to watch out for. So for today, trade safe, stay tuned for pre-market prep. I'm going to work on my my throat, and ultimately, you'll have a great trading session. We'll talk more tomorrow, and we'll cover a little bit more of this as we deep dive into some other topics. So, talk to you all soon.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible weekend. Good morning, Norm. How you doing today?
Good morning, buddy.
Hey.
I'm doing all right. It is raining cats and dogs at my house.
Yeah.
We're now up to almost 9 inches of rain
Wow.
since 3 o'clock yesterday afternoon. And
Yeah.
that is up until yesterday, we'd only had 14 inches total. So there is thunder. You might hear some of that. There's some lightning. I've lost power a couple of times in the last few hours. So if I suddenly disappear, it's not because I don't love you, Carlos.
Thank you, man. Now I know not to get offended. I appreciate that.
Uh,
So you had what? You have 14 inches from year to now, from the year to now,
from year to yesterday, we had 14 inches, 14 and a
and now
half,
you
I
got
believe.
slammed with
And
8.
then since yesterday afternoon, we've had just shy of 9 inches. And it's still coming
Wow.
down. It's supposed to be doing this all day until this afternoon. So
Talk about
yeah,
trying
I
to
mean, we
make
need
up
it.
there.
I'm not
Yeah.
complaining. We need it badly, but it's
Not like
just
that, right?
we didn't need it all at once. So
uh, guys, welcome. Hopefully, everybody's doing well. Hopefully, you guys had an incredible weekend. I had an amazing weekend with the family. I hope you did as well. All right, guys, let's take a look here in our gappers list this morning. We a little bit on the gap, some stuff on the gap up this morning. A lot gapping down today as Jerry went through some of this. Shout out to Jerry. So a thumbs up over on YouTube there. And you can see today the market is down about 1%, and a lot of tickers feeling that this morning. Some with catalysts here, like these big ones, AMC, of course. Some stuff going on there. We'll get into all of that. So, yeah, it should be fun overall for the market. Norm, what do we have going on as far as any big events or?
Well, nothing really spectacular today. Chicago Fed National Activity Index came on right when we were 4 minutes ago. The big one for this week, I think, is going to be the end of the week. We've got some inflation data and stuff coming out, but we've also got the Fed Symposium Jackson Hole that they do every year. And Jay Powell will be speaking Friday at 10 a.m. So Friday should be a very, very big day with both the data and that. I will say on the SPY, things look relatively nasty this morning. We had a pretty red day Friday, pulling back. I mean, Jared's discussed a lot of what's going on, but pull back this morning, SPY down 1.2%, Q's down 1.5%. So yeah, we'll see.
Yeah, definitely not looking good as far as that this morning, but that
But
should
you know
provide
what?
some
It should
opportunities.
give us some good trading opportunities.
Yeah, because I gotta tell you, last week there were some, but not many, and the ones that
Yeah.
were available were not great.
And that's kind of what I felt.
Yeah.
Some of those mornings, just it was not looking good. Friday,
Mhm.
things kind of changed around a little bit, but we just got up there close to the moving average on the SPY on the daily, and just sat there, and you could feel it really. No,
Yeah.
there was it the rally since June,
Mhm.
July, mid-July,
Yeah,
or
mid
June,
June. Yeah.
actually,
Mhm.
mid-June, had been so strong, and people just started to doubt it, and you could feel it. I mean, there was the buying interest was drying up. So
Yeah. It's definitely aggressive. I mean, look at the move that we did here, guys. It started mid June. We did really mid July. We never looked back, right? We kind of consolidated here, but right mid July, Norm, as you said, this thing just never looked back. So time for a break or a pullback. And as I mentioned before, many analysts, professional analysts, believe that we're going to get back down to 380 or lower. So
lower,
they don't feel as this is done yet, right? We're not going to recover this easily. Um,
I'd be
okay, guys.
surprised if we were.
Yeah, I think I would be too. I mean, it's just, we'll see. Gappers list this morning, guys, to see what's gapping up. We'll look at SGFY today. Oh, let's link my trade ideas here. Let's go ahead and do that so we can work more effectively here. There we go. Okay, so now let's go back over here to our gap up list, SGFY. So this thing is gapping up 42% today. Wow, that's
Yep.
looking pretty good. This is Signify Health.
Yep. So this is actually, there are 3 companies at least that I've seen that are potentially bidding for this to take it over. United Health, CVS, and the big boy Amazon.
Nice.
So it's shooting up on that. It'll be volatile, that's for sure.
Yeah. Definitely in play, guys. But again, just very careful on this one. As Norm mentioned, I 100% believe it's going to be very, very volatile this morning and throughout the day, depending how news comes out and everything else. ENVX this morning, they're up 5%. We've seen this before, gapped up like a week and a half ago, and then we've seen them in the past as well. I think they gapped up or down. Either way, I'm not a big fan. They trade very light on volume. Pre-market actually doesn't look great neither. They're only up 5%. This is the only thing that looks good. Outside of that, I think we need to give this a little bit more room to develop. So we're going to skip on it for now based on just the pre-market being so light on volume, only 130. NVO this morning, also not looking great. They got 105 on 2 candles, looks like, here and here. Outside of that, this is really should not be on our gappers list. And even if they had great volume, right?
This is a drug manufacturer out of Denmark. It does not trade well.
Yeah, horrible daily, guys. So we'll move on to the next year. VREU has made a lot of noise in the last couple of 2 or 3 weeks. Today they're gapping up 2.7, have sold off, almost say gapping down because really sold off a lot this morning where they were all the way up here at 20. Light volume, as you can see, very gappy here pre-market. That's going to get better. As you guys know, I've seen a lot of great trading happening on this one, and they get decent volume. Not great, but they get decent. Could be interesting today. Could be interesting. They gapped up and sold off a lot here. Are they trying to go red maybe? Could be fun. VREU, let's put as a pause so we can always come back to that. So that covers our gap up list this morning. Let's see what's gapping down. The big story this morning is it's actually not AMC's on what you call it, on a sympathy play, right? Because who's
No,
actually,
no, there's news on AMC.
there's news on them too. Okay, because I know
Oh,
somebody's going
absolutely.
bankrupt in their business, right?
Well, that's part of it, but the other
right.
thing is, so I got to tell you, I don't. I usually understand these things, and I haven't spent a ton of time digging into it, but it's very confusing.
Yeah.
They are offering kind of, it's not a stock split. They're calling it like a special dividend where they're awarding shareholders of record on Friday a special unit, of stock of equity called an APE, AMC preferred equity unit, APE unit. So obviously they're on the, they're riding the coattails of the meme stuff. And I don't know what to make of it. It's very strange. I can't hear you, Carlos.
Oh, I say that's interesting to say the least on that. Yeah, let's see how that's going to play out. I mean, they're down 40%. So whatever they're doing, doesn't
And then,
seem.
as you mentioned, there was another theater that there were discussions of bankruptcy last week. So,
Right.
yeah.
Which, again, it's interesting. Could be because it's so confusing, Norm. Many people don't understand. They're like, wait, what the hell is this? And that could be causing some of that. Because if you don't understand
Well,
something.
the companies say it's not dilutive to shareholders, but I don't see how it isn't. That's what I don't quite understand. But, it's a very weird deal.
It's definitely a market's not liking it, whatever it is. So right now they're gapping down 40%.
See, and Dream Chaser, well, from what I've heard, Cougar Cub, the ape share has not been distributed yet. There was there was some kind of slowdown or hiccup. That was as of like an hour ago, but maybe it has now. And see, Dream Chaser saying, make sure you understand AMC is not down 38%. Ape dividend is really just a 1-for-2 stock split. In fact, it's trading above 9 actually means trading above Friday's close. So yes, it's a very weird circumstance. The whole thing is very strange. But the company's saying it's not dilutive to shareholders. Well, if it's a stock split, it is dilutive.
All I know is if I'm in at 17,
or I guess it's not technically, but it's a very. But they're taking it out of there and putting it somewhere else. It's weird.
For day trading, I don't see how that works. This is down 38%.
Like I said,
on my screen, right?
I mean,
it's weird.
It's very strange, but
Very
it'll
strange.
be in play. So regardless, catalyst doesn't matter. It's a strange thing. I haven't seen it happen like this before. And
we'll put it on here. Technically, it's not. We'll see. We'll see, guys. We'll see.
That's perfectly put. Technically, it's not a split. Pragmatically, it is a split.
Yeah. So here for us as day trading,
making my brain hurt.
I feel like I have to just go back to bed here. But yeah, AMC in play. Definitely great volume right now. So I like what I'm seeing there. Let's take a look at this gappers list. Down, we have a BBBY. Next, the party here is over. It's just, I think this is still will be some opportunity for scalping if you are experienced, but just be very careful. No shares for short right now. This will be active already, 3.1 million. For me personally, I'm not going to add it to my list. I think it's just not tradable. It's not going to be fun for me at all. As you can see, our members are slightly confused this morning with some of the memes we're throwing out here. But yeah,
I'm sure it's not as complex as it seems, but it's just when they're doing something like that and they're naming it after the Wall Street Bets stuff with the apes and all that, it brings in just a bit of comedy, I guess.
Yeah.
And like Kevin says, he says, I'm sure it's as shady as it sounds, and that's the other thing about it. Right, is it makes it seem shady.
I agree 100%.
Not to mention they're like $5.5 billion in debt.
Right. Well, it's just something's happening there. We'll see. It'll all shake out at the end, and we'll get more information as this that develops. WebR this morning, 17 million shares flow. These guys are not doing a whole lot, very light on volume, so I'm not interested in a float that's this small. This low here, and it's only doing 162,000. So let's go. We'll come back to that. Here's GameStop down 7.6. Again, no volume really. Probably just moving down with BBBY and obviously AMC, whatever they're doing. So, but really not in play at the moment. Here is plug. Plug again. Plug's getting a little toppy here, 29.30. We saw a couple of down days there, and now they're down 4.8. So it might be interesting. Let's put a plug in here. Might not be on our main list as we go through this, but definitely interesting. A-Firm, I know you guys like A-Firm. I've seen many of you guys take advantage of A-Firm. One of our mods included, Thor and Brian. They traded it live a couple of times. Right now they're down 4.1. Volume is not there yet, but man, they have not been having fun the last couple of days, guys. As you can see here, really taking a hit, especially Friday, sold off pretty aggressively. So we'll do levels for it. I might not watch it on my list because I'm not a big fan of the way it trades, but we'll do levels for it. IonQ, no, horrible pre-market activity. Did drop a lot on Friday, as you can see here, but for the most part, not great this pre-market at the moment. UPST, we'll do this last, and then we'll go over to see what you guys like this morning. No, not great. Light volume 136, down here again 4.2. The last couple of days also been down quite a bit. My issue with Upstart is the volume and the way it trades. For me, it's not a clean intraday trading ticker. I want to do DKNG actually, because DKNG has been very, very active. It's kind of like, they had this nice run to 21. The last couple of days just getting dropped here, and they've been trading very well. If you look at some of this intraday action, it has actually been pretty clean. Maybe not Friday, but some of these days have been pretty clean. So could be interesting as they're getting down here on DKNG. Maybe not a main one, but a possible one. So we'll throw that on there, and then we'll stop here. Because this list obviously very long today with the SPY dropping a bit. Some of these tickers are moving downwards. Norm, anything on your list that you like this morning?
You ready?
Yeah, I'm ready. Let's do it. Ape.
That's the share that AMC is giving away. So
Yeah.
it's going to be in play.
It's gonna be in play.
It's not trading yet. So it's got no
yeah.
volume, but it should be trading at some point later today.
Yeah, this is that is smart. Listen,
Got to
it
at
is
least
smart.
watch it.
Yeah, you
see
got to
what
at least
happens.
watch it, and it's very smart of them to
It
do
could be
this.
interesting because this is a preferred share class. So technically, I just brought up the problem of AMC's debt, massive amount of debt that they've undertaken, and obviously the problems they've had with COVID and everything. This is a protected share class. So technically, if the company were to go bankrupt, the owners of this share would be in line to collect something from the company ahead of the holder of the original AMC shares.
Yeah.
So be interesting. Anyway, really to watch it. It's
AMC's
for entertainment, and so is Ape.
Yeah,
correct,
absolutely.
Kevin. Not ahead of debt holders. A preferred shareholder would be ahead of the common shares, but not ahead of debt. Debt holders first in line.
Yep. So we'll see, guys. First, I seen this actually play out in the stock market, something like this, worded this way or set up this way. So it will be definitely interesting and learning experience for a lot of us.
In reality, nobody'd be getting much of anything.
Yeah. That's true. Let's take a look what you guys like
or something
this morning. Let's look at Oxy. Is a good one, guy. Go one buys. Going to buy. Good catalyst. Let's see. Wow, big day on Friday. Look at Oxy on Friday.
Well, we talked about this. Warren Buffett has been approved to take up to a 50% stake in Oxy, so that drove it like crazy on Friday.
Yeah. So we're gonna put Oxy on here. Let's see how that's gonna continue. Obviously, anything that man is involved in is going to do well based on his history and his track record. So definitely a good one to watch this morning. Ran up a lot Friday though. Let's see how much juice it has left in the tank. We might not see it do so well. It might be choppy this morning. We'll see. GCT just IPO last week. IPOs lately have been just wild. This one here actually has not sold off in its third day. Up 18.1.
Just be super careful with that.
Yeah, just be careful. There's not a whole lot of information to go on here, right? And that's what I look about these new IPOs that just kind of open up. They go wild. They get all this volume. Everybody's just trying to catch something, I guess. But I don't see how this would be on my list and the reasons for it, right? Maybe a good scalping opportunity. That's about it, because not a whole lot of detailed history to go on. So GCT, we'll put that on there for now, just as a possibility for some scalping. Walmart and Cisco gap fill potentials. Yeah. Walmart, let's see, they're dropping down here and they're gap up. Yep, I agree. So that could be a good one. Maybe not right now. These are going to be good for for trend trades, maybe swing trade opportunities, depending on how you trade. But for right now, activity and volume are very, very light. But I agree with you, Jeff P. With the market dropping down, these two that have gapped up quite a bit are really good for these gap fills towards the bottom, especially if the SPY is going to run south. Might not happen only one day because they don't move a whole lot, but throughout the next couple of days, these could be really, really good for that. So, yeah, I agree. Keep an eye on those if that's the type of action you're looking for. Heading on down, let's look at CCL from our buddy Dream Chaser. Let's see what's going on here. CCL down 4%, a million shares traded. Yeah, this is good volume for them. A pre-market that's not as active or great, but this is good volume. Definitely worth putting on here. When I think of CCL, I think of American Airlines as well, but they're not doing anything. They're pretty quiet at the moment. Anything else, guys? I've been looking at it. GCT is hella choppy. Yeah, that looks like it's gonna be a chop fest. So just again, be very, very careful. I mean, look at the candles, guys. Right? Look at the candles. 58.50. And this one here is going down to 57. That's $1.50 right there. And this one here, 58 to 55. That's $3.
That spread's getting a lot at sometimes.
With 40,000 shares traded,
50 cents or so. So right now,
careful, guys.
Just be careful.
Over on YouTube, what else do we have here? SVRE. SVRE. We'll look at Apple. We'll look at TDOT. We'll look at all of those. We'll have time today. SVRE. If I could type here. No, I don't like the price on this one. 51%. Saver 1. What's the float on this thing? Yeah, it might not be a low flow, actually. It might actually be a... no, never mind. It's a scary flow. 872.
Scary float. The whole market cap's $19 million.
Yeah. So again, careful. PLTR, light volume. I'm not sure. Could warm up. Has been trading very well the last couple of days here, dropping down. Could warm up, but I don't see it right now, so I'm gonna keep it off the list. But Sean, if that gets going, we can definitely come back to it. Netflix dropping down here 3%. Could be a good one, good possible here as the market overall drops. We haven't looked at our favorites. You guys have not thrown these out. AMD, we did throw Apple out. Gem, I did see you did that. But AMD here this morning, 2%, 408. Volume is very light right now on AMD, so I won't be adding that one. Let's take a look at Apple. Apple 1 million. Yeah, Apple's good. I'll add Apple to the list. And we'll stop there for now, guys. We'll have time today, and we can look at some more a bit later. With that said, let's take a look at our webinars. Oh, I don't even have the webpage up. Let's do that. So let's go over to bearwoodtraders.com, guys. And if you come here, you can go to the webinars link up at the top, and you'll be able to see the webinars coming up for the next 2 weeks. So,
absolutely. So here's what we got going on. Onboarding and technology every Monday night with Carlos. That is at 8 p.m. Eastern, open to all membership categories, so even the trial membership. Check out Carlos tonight. Then Tuesday, strategy. Tomorrow night with Andrew at 8 p.m. Eastern, talking about the art of trade management. Following week will be Mike, talking about how to find a trading strategy for you. That's at 8 p.m. as well. Next week on Tuesday, this is like Mike-a-thon here. Then Psychology Wednesday, we've got Mike once again, 8 p.m., talking about creating a psychology journal. And the next week, Mike once again talking about overcoming fear. So check those out. The Mike. Thursday, you've got mentorship. John at 11, Ed at 4, Thor at 8. And don't forget about stocktradingsimulator.com, our free web-based replay simulator. You can go to stocktradingsimulator.com 24 hours a day, 7 days a week to go try to hone your trading skills for free. And then speaking of that trial membership, we have PreMarket 24. The discount code will get you a discount off the usual $39 cost. Just go to bearbulltraders.com, scroll down about halfway down the homepage. You'll see the membership chart. Click join now on the intro. It's 7 calendar days. It is a one-time charge. It's not recurring. And then if you'd like to become an Elite Annual member, you can use the promo code READ50, get half off the Elite Annual membership, and a free one-on-one coaching session with Dr. Kenneth Reed.
All right. Thank you very much, Norm. Okay, guys, let's get to it here. Let's get to some levels, and then we'll have a little bit of time to see what else on our list might be looking interesting. So All right, we'll do CGFY. Let's start here with this one, CGFY. This thing is capping at 41%. And again, just be careful with this one. I think it might be a little bit choppy. Actually, you know what? I might move this down as a possible actually. Based on the way I trade, looking through this list, yeah, it might be a good possible. I just think there might be some chop at the beginning here. We do have shares for sure on this with interactive brokers. We got plenty. Yeah, so I'm just gonna put I'm gonna put it down. I think you just got to be very careful. I think you might see a lot of chop in here, and we just got to be a little bit careful with that. It might be more of a secondary or a risky play there. AMC guys definitely in play. Will be funky today with everything going on. They're down 40%, 11 million shares traded. So that is good. Plug is down here. Not great pre-market activity. I do like the daily though. We're losing some key areas there as far as support. And this thing has been dropping the last couple of days. Looks like it peaked over here at 30. From there, it had the 29.30, which was a great area of resistance. You can see here over the last probably 2 weeks or so there. Couldn't get above that. Now we're kind of turning the corner here. And the SPY obviously not helping a lot of these tickers that are on their way down here. As you can see, A firm will do levels for that as well. I'm not a huge fan, but we'll see. Oxy definitely in play after all the news is on around that. CCL, we'll see. CCL and Apple will be a good one just to watch to see what the overall market is doing. All right, let's get some levels. So let's start with AMC. We're looking at love the pre-market is lower, but I'm going to mark this 1078 here. We're getting a little bit of a bounce there. Your pre-market low is all the way down here at 10. We can mark that there as well. But if we bounce here, it'll be worth keeping this level here because we're bouncing based on volume now. This really early on, low of the pre-market, it was probably some transactions being recorded there. And you can see the range we had 10 all the way to 17. I mean, just insane when this thing first opened up. So trying to figure out what a lot of this stuff means for AMC, day trading, stockholders, and all that good stuff. We within the pre-market action, we do have 1156, right? We had a nice level there. And then we also have this area here where we're seeing a lot of touches over at 1244. So worth marking those down. High of your pre-market, pretty much the previous day close and the highs and lows for the last 2 trading days, all the way up here, as you can see here as well. And then as far as the daily levels, towards the bottom, right now in your pre-market, you already have some decent levels because we dropped so much that even if you go back to your daily, you see some of these pre-market levels that we just noted down. There are great daily levels, right? So they're coming off the daily. People are respecting that. You can see that there. You can see the low of where the price action is now, and then the low of the pre-market all the way at 10. Obviously, a whole dollar, you're going to have some support happening there. So these levels that we marked here are corresponding with the daily levels that we're seeing. Continuing above the price action with the daily levels we have 1391. Might actually be 14, but you can clearly see there that's a great level of resistance. Then later became support when we had the breakout. Definitely want to have that down. And then above that, we do have another big level here. There are some smaller levels down here. I'm not going to worry too much about them. I'm going to worry about this 1603. That's a good level. You see a lot of touches and also change in direction, which is nice. When you have a level that, makes the stock goes the other way after it tests that level, that is a good sign of a strong level. So 1603, definitely a good one there. You see a lot of touches on that level. So that's what we have. In case we come back down and we fall below 10, we have to go back quite some way. We're going back to 2021, just in case we do drop below here. Let's get a level towards below 10 here, just in case. What do we have on the daily? We're coming up on, that seems to be 9, which is going to be the whole dollar. So yeah, 9 will be another good level there. I don't see anything else that looks great, but 9, obviously a whole dollar level there. That's going to be the next one that looks significant as far as the daily level goes. So we're all set there. Let's look at plug this morning. Again, I think it needs to become a little bit more alive right now. It's a little bit quiet for the most part. I do like the daily. I prefer it, the daily on how this looks at the moment. Down 25.30. Sorry, not down, but low of the pre-market, 25.30. 35 at the moment. Towards the bottom, we can mark down 24.18. A decent area, not a great level. I don't see a lot of touches, at least in August here. But if we go back, is there more confirmation? Not quite. It's a little bit in March. Actually. You got a few touches here, which makes it decent. But again, not the best level. It is definitely not a 26.63 where you have tons of resistance happening there and support. Right, it's a very big difference. So you also got this other level here at 23. You have a lot more touches there as well. I'm definitely going to mark that down. And I think that would do it for plug. Again, plug very quiet right now. Might not stay on our list if it stays like this. Hopefully it can pick up at the market open. Pre-market high, we can mark that down. We're going to slam a level over at 26.11. That covers the pre-market high for plug. Let's look at A firm. So this one has been dropping quite a bit here. The last couple of days have not been fun for them. 29.10 is the low of the pre-market. The high of the pre-market pretty much stuck between um, the previous day close and the highs and lows. I think this is going to be more important than actually 30.75, right? But either way, we can mark it down. 30.71 is the high of the pre-market at the moment. But you got your previous day close and highs and lows surrounding that, which I think are going to be slightly more important on the levels. Then towards the bottom, in case we were to continue this drop we've seen over the last couple of days there, last 3 days have been in the red. We lost the peak of 40 down to 29.56 at the moment. Towards the bottom, we do have a couple of areas. The big level here you can clearly see is going to be 26.46. A lot of touches there, support, resistance across the board. There are some smaller levels in here. Maybe this one here got a couple of touches, 28.14. I don't see a whole lot there, only 2 days, but for the most part, this 26.46 is what we're aiming for. If we are going to be weak today, that's an area we would love to get into if we're going to drop down an A firm. Again, not a big fan of it. I think pre-market action usually on A firm very quiet, so you cannot put a lot of weight on the pre-market activity because if you look at this, right, very similar to what it had on Friday, and still look at the beautiful drop you got on Friday. And A firm tends to do that. If you come here on a lot of days, it's very, very quiet. Here's another pre-market activity. You also got a nice drop, not as big as Friday, but you did get a nice drop early on. Then it went sideways for a bit. But you can see here, you start to get to know these stocks a little bit. A firm is a type of stock that pre-market you're not going to get an AMD Apple type activity, right? It's going to be very quiet like it is today, and you can still get an amazing trading day. So just keep that in mind. Don't put a lot of weight into what's happening in the pre-market now. You got to wait for the market open to see if this thing is going to be a good one. Just in case we get going here, you have your highs and lows all the way up here, 37 to 34. We got a couple of highs and lows there from the last 2 trading days. But there is a level here that you might want to mark down. It's going to be down at 33.15. It's an area you're going to cover the open and close here. You're going to cover this bounce that you got here as well. Just in case you do decide to push up, we're not going to get to 34 in one shot. We are going to make a pit stop somewhere. And if we decide to do that, 37.15 seems to be the right area for that to happen based on the daily. Looking at actually here, guys, big day on Friday. I mean, this thing ran up 64.73. A beautiful run here with Warren Buffett getting involved. At the moment, low of the pre-market sitting at 69.32. We'll slam a level there. And let's slam another level at the high of the pre-market at 70.92. So again, nice range there as far as highs and lows. And towards the bottom, let's see what we have here on the daily. We might need to go back a little bit. Roughly 66. Roughly, again, I don't see great. This is not a great daily, by the way. Few levels here that are very key. It's this one on here, right, which is already marked down by our highs and lows. You have another one up over here as well, around 65, which is already marked by our highs and lows as well. And then outside of that, you don't really have a whole lot of great levels in here, right? You don't have that. Maybe 66 could be a potential one. The big one is over here, over at 69.37. That's already marked down by our low of a pre-market, and the high of the pre-market is covering the top of this range, right? We had a lot of action here. Look at the ping pong action there. Those two already marked down by your highs and lows, right? So no surprise why that is your high of the pre-market and why that is your low of the pre-market right now. Although looking a little weak, I'm sure there's some people here this morning waking up saying, hey, the fun could be over. Let's start taking some profit or maybe short this. So keep on the lookout for that. But for the most part, in play today, great volume, 717,000. Usually Oxy does not give you that type of pre-market activity with that volume, but you're definitely getting it today. Here's CCL. CCL is more of a possible right now. They do have volume, pre-market activity down 4%. Let's see where that goes. 945 low of the pre-market. Towards the bottom, we do have 871. We're going to slam a level there. And all the way down here also at around 812, a good area where we got to bounce as well. Towards the top, highs and lows of the last 2 trading days, I really think you do not need to add anything else to keep it pretty simple. Apple, at the moment, we are having good volume on it, 1.1 million. Pre-market activity is just kind of following the overall market right now. And if the SPY of the overall market decides to drop the Qs, I think this could be a real fun one to keep an eye on for a possible drop. So 16408, another area where you're seeing a little bit of support and resistance on there. You do have one here as well, 167, might be 167. A couple of days using that as resistance, a little bit of support happening there as well. Towards the top, guys, plenty of highs and support levels, highs and lows for the last 2 trading days. Just add the high of the pre-market over at 170.29, and I think you are all set. And that's going to be the same for a lot of these tickers that have been, again, rallying with the SPY, coming back down now. Your highs and lows are going to be pretty much up here. Focus on getting levels towards the bottom in case we are going to head south and test some of these levels that we had in the past here. SGFY, we'll do levels for this, but this thing is just wild. I think it's going to be very choppy. I have the pre-market 3040. So we'll throw a level there, 3040s. I have the pre-market, your lows all the way down to 2216. Within that, you do have 2324. Good level of resistance right there. We recently were struggling trying to get above that. To the left, when was the last time we've been up here, if at all? Okay, here we go. We got a lot of activity within this gap up that we see here. So on the daily, just in case, again, not really a great trader. Obviously, they got big news today. We'll see what that does. 2693 is a good one here. We do have 2515 on the daily. Just looking for areas where we have a lot of touches. This daily, by the way, is not great. Look at the way this daily trades, right? Here, look how choppy this is and how wicky it is. I don't like those type of dailies, but today these guys are trading much different and are heavily in play. Another level 3186 towards the top there, guys, and I think you're pretty much set as far as this goes. And if you look at the pre-market, you see some of this stuff being respected, right? It's 29,811. You're seeing a little bit of action there. We got that off the daily. What else we have? 26, and the rest is such a big gap up that we just blew right through these levels here. So didn't even think about these levels, at least not on the 5 minute. I'm not sure what the 1 minute did there, if we can dive into that. All right, so that's what we're looking at. Abe, we'll see what happens here. This will be a lot of fun. DKNG, be on the lookout for DKNG. They've been turning the corner here. They're sitting at an interesting level of possible support. If not, they have some good news here of new states being approved for gambling and all that good stuff. But again, that fun seems to be over a little bit. This could be a move just with the SPY. I don't think they have their own independent catalyst. But they could be good. Let's see. They've been trading very clean as well in the last couple of days. So we'll see if that's going to continue here. Even if we do get a drop, I think it'll be exciting. All right, that's what we have so far, guys. Let's take a look. Anything else that we might have missed? Down 4%. Article on the Wall Street Journal. And what is it? 1.7. Yeah, see, 1.7 billion. That's a lot. It stinks. But it's Ford. I mean, they'll figure it out. I don't know if this thing is gonna really drive them crazy. I think this might be more of an overall move with the market. I mean, 1.7 for Ford. I just don't think it's a lot, but just don't think that's gonna be a deal breaker for these guys. I mean, we'll see. 1459, 1403, and 1340. You got some levels for you there in case you're interested in this, but I just don't see this stock moving, even with that, with that negative catalyst. It's Ford. It's just it is what it is. They've been through worse. Let's see here. What else we have, guys? Okay, GSK. Another company, Lucio. Another company, that type of thing. Yeah, you're gonna feel it, but not on Ford. GSK here. They are all over the place. No. Pre-market. I'm trying to look for something good here, but I don't see it. Just be careful. I mean, again, these guys gap down huge. They've been dropping down here. Depending how you trade, when we say no to a stock, it just means the way we trade, and this looks horrible for the way I trade and many of our moderators. But if your style of trading, this says yes, go for it. But yeah, I don't see how I can put this on my list. Looks weak though. Looks like it wants to lose 34 and just continue to drop here. But I don't see how you can trade this properly. I mean, this was the action on Friday, right? This is the action on Friday. I think there was one day this thing probably traded well, was this one here, because you had the gap down and you had 35 million shares traded. But look, Friday you did trade, well, you traded what? About 5 million. This is horrible. This is really bad intraday action. I think you're going to get chopped up in that. And it's going to be hard to read your strategy. Like, how do you read your strategy or something like that? The day before, this is a nice drop. This is a very, very nice drop. Again, looking at after the fact. Volume still light though. 146 on this drop here. It's hard to get in a stock that's trading 146,000 shares. This thing is the liquidity and just the moves are not there. It looks good now, but looking at this live is going to be very difficult to trust a move like that has barely any volume. So just be careful if that's going to be the case for this one. All right, anything else that you guys like? I see moderators coming up with their list already. I see Thor, I see Peter, we have Susan, and we have Ape. This is a very unique offering of AMC preferred shares, which is expected to open today and trade at the same price as AMC. Will be interesting. Will be very interesting. I think Ape is going to go insane. Insane. Yeah, it'll be fun. It'll be a lot of fun today. What do I think about BTC? Nah, we don't trade Bitcoin. We don't trade Bitcoin. I don't trade directly, at least. Let's do this. Yeah. Bye. See ya. I'm not gonna allow that. All right. Gotta get rid of some people here. What else, guys? GCT, SSQ. Yeah, the Qs. I mean, the Qs, right? You could watch them. They're definitely moving today. They're down quite a bit. 1.4. SPY is down 1%. So again, and not just that they're down 1%. The interesting part is, are we changing direction here, right? The 1%, well, up 1%, down 1% means nothing now in the market. I mean, we're up. We do this every day. Every day we're gapping up 1-2%. I mean, it has become normal. A year and a half ago, 2 years ago, that was not the case. Market was a little more calm. Now that's just a normal move now to wake up and be down, 1.5, 2%. It's no problem. Are we changing directions here? And that's the key. Are we going to lose some of these levels? Are we coming back down to this area? Not today, obviously, right? But are we changing directions and are we moving towards the bottom here? As many, I think more people expect this move than actually to just kind of consolidate and rally back up, right, towards all-time highs. I think, and Norman's in this camp. I'm in this camp as well. I think we're just not gonna just recover like that. I think there's just more downside to this. To retest some of these levels before we just get going. So we'll see. SGFY is on my radar. Yeah, it's on my radar too, but I'm probably not going to be on my main list. But yeah, it's on my radar. I mean, this thing is up 40%. It's got some really good catalysts here, right? There are a couple of companies I want to purchase this one. Amazon, United Health, some big guys there to name just two. I think it's another one as well Norm had mentioned before. So yeah, it's in play. There's a lot of interest, but I mean, I just don't think, even with that this thing is going to trade clean. It's just these health companies, they're tough, man. They're tough to trade. Like if you look at United Health, I traded it once and it was brutal. I mean, they get really low volume. Obviously, that's not the case today with SGFY, but I think that DNA of horrible choppy trading is still within that stock. And I think even though they get the volume today, I don't think they're gonna trade well. Again, I could be wrong, but I'd rather put my money elsewhere and be wrong. It's okay. I'm okay with being wrong with this one and missing an opportunity that I think is not gonna trade very well. I'm okay with that. I'm not okay with trading it and then saying, "Damn, I knew it. I knew this thing was gonna be bad." Right? I'd rather not lose money on this. So we'll see. See what happens. All right, moderates list is up, guys. 2 minutes left for 9:15. Let's get this list over here and kind of show you guys what's happening. And then we can, let me go ahead and, oh, I hit the wrong button. Sorry, you guys lost my screen in the chat. I'll bring it back. I think, there it goes. I hit the wrong button. It's over here. Warming up this Monday morning as we get ready for the trading week. So let's go ahead and disable this video here. There we go. So now I can bring this over and you guys can see what our moderators are looking at. I say I'm doing this, guys, over on YouTube. If you haven't done so already, hit that thumbs up. What are we sitting at? Do we hit our goal at 250? No, 145. So we need to get a few more to get a 250. That is our goal for the day. And if you guys can help us get there, really appreciate it. Set the week right, and we can start off on the right foot of things here. Let's go ahead and bring our moderators list. Let's see what the moderators are watching. So I read this comment to you earlier on the IPO Ape, which is again is a very unique situation, which it's going to be very entertaining. Watches for Thor, AMC, Apple, SPY, and the Qs, pivot, alert, bot of course, Peter will be looking at AMD, AMC, Apple, secondary list, Oxy, CCL, and SGFY. Susan will be looking at SPY, the Qs, Oxy, Apple, Tesla on her list, no secondary list today. And Jared will be looking at AMC/APE, BBBY, and Oxy this morning. Megan will be looking at Tesla, Home Depot, and Walmart on her list today. So that is what we have. We'll wait for a couple of more monitors. We'll wait for Brian to throw his list out. Is Brian, I know some you guys were traveling to California. It looks like I saw a couple of pictures. It was a very successful event. I'm sure Brian will talk a little bit about that as he hops on here. Oscar, thank you. Oscar saying 433 people watching. Hit the like button. It's free. Yes, it is completely free. I guarantee you it's not going to sign you up for anything. And we will not charge you. YouTube will not charge you for that at all. But it helps us out a whole lot. And it does help the channel. So thank you guys. Appreciate that. Brian's list, as he gets ready to hop on here, guys. Oxy, AMC, SGFY, ENVX, A-Firm, and Tesla. And what we'll do is for our friends on our YouTube that wants to stick around, we'll keep it on until 9:30 before the market open. I'm sure Brian will talk a little bit about the events. So for those that did not make it, we can kind of hear how it was. So I'm going to put Brian's screen as he hops on. So we'll listen in as Brian gets ready, and we'll be ready to rock and roll for 9:30. So guys, just to fine tune or just to recap here, we have AMC on our list. We have Plug, we have A-Firm, Oxy, CCLs, more of a possible, but we'll see what happens here. And we have Apple on the list getting a little bit of a bounce. Keep an eye on the SPY today because, again, a lot of things are moving with the SPY. So we're down 1.2 here. The big thing is, are we going to be losing some of these levels? If we are, we're going to have some really good opportunities towards the downside on a lot of these tickers, guys. A lot of these are going to be moving very well towards the downside. And then be on the lookout for stuff that's not selling off, right? The stuff that's not selling off, like be on the lookout for Oxy. If Oxy does not sell off more than this and it holds, Plug holds, and then you get any kind of strength in the SPY, these guys are going to shoot up. That's usually what happens. Anything that doesn't want to sell off because they're strong, when the market sells off, they kind of don't want to follow the market, but they might be forced to a little bit. But when the market turns around the other way, be on the lookout for those that did not sell off. They usually turn out to be a really good long opportunity. So be on the lookout for that. All right. With that said, I'm going to hop off. Brian's is up next. Guys over on YouTube, I'm going to switch your screen over to Brian's screen, and then we can get this morning going. All right. Let's see over here. I'll actually put the scanners on for our friends on YouTube. Brian, you can hop on anytime and just kick me off. No problem. There he is. Good morning, Brian.
How's it going? How's the
Good,
weekend?
good. Weekend was great. You might be hearing an echo because it's just the way this works when I'm on. So I'm going to hop off. Weekend was great. Had a
Okay.
great time with the family. Can't wait to hear about the event.
Excellent.
Looking forward to it.
Yeah. Okay. Well, let's rock and roll, baby. We had a great meetup. People that were there, I know there's probably a lot of you that were at the meetup on the weekend or in the room this morning, and it's great to meet everyone. It's great conversations. We had a really good long afternoon. Presentations from Megan, from Artie, from Mike, from myself and Andrew, and then we wrapped it up in the bar. A few of us even closed the bar down. So let's go ahead. I don't know about that. Anyway, it was really good. I think it went off really well. It was the first time we had done anything like that. Usually our meetups in the past had just been go to a restaurant or bar or whatever, just have some drinks and conversation. This I think gave people who came a lot more stuff to think about, and I'm planning the next one already. So Anyway, yeah, Megan led off our seminars in the afternoon. She told us she'd never actually publicly spoke in front of a bunch of people before, but I'm really finding it hard to believe that she killed it. Yeah, there you go, Tony. Hey, there's one picture from our meetup. Yeah, so it was good. We had over 60 people show up. All right, so I'm just I had some SARK. I was holding SARK, the anti-Cathy Wood ETF. I'm selling that right now. I've got natural gas and some Canadian accounts that it's up. Oh, it's up a lot today. It's up by like 5.5% again. Well, it's just I'll just answer that question quickly because we're got to start talking about the open. But yes, I did work, and this was a conversation I had with a number of people at the meetup last on the weekend. A lot of people sort of came to me and were talking to me about how they trade in the morning and then they go to work, and I just told them to continue to do that. There's there's if you're trading for and trying to make a living or doing it to make a living, you're just putting a lot of pressure on yourself, especially if you're just starting out. You just don't want to have that added pressure that you are depending on your trading to to pay the bills. So best to keep working at trading and and keep going to work, especially if it's work you enjoy. And that was a case with a number of the traders. They said they enjoyed their job. So I said, well, why stop? Don't put pressure on your that you don't need. So oil and natural gas are kind of two different areas. I'm not really 100% sure if I'm not as confident on oil. I mean, if the oil, natural gas is, this is a issue that's just playing out in Europe basically, but it's going to impact the prices of natural gas in North America. So, because our prices are based on Henry Hub primarily, which is a big storage area in the U.S. Believe so. Yeah, so I don't. Oil is different. I mean, the oil is more impacted by the economy and recession. I mean, people don't travel as much, and industries don't operate as much. In recession, China's struggling. So oil is less. Not as. It's got a different story. Let's just say that. So anyway. We had some good laughs. Yeah, we had some good laughs too. There you go. It's all pictures from the meetup. Yeah. That was Tom, I believe, from Florida. There we go. Okay, well, Apple is catching a bit of a bid here. I'm maybe going to watch Apple. I'm not really ultra keen on too much right now. What's Rivian doing? Yeah, Rivian's selling off. Rivian could be interesting to watch. Indexes aren't doing much. Qs and Apple, or Qs and SPY. Oxy's looking a little weak. I don't even like trading Oxy, but there isn't much to watch here this morning yet that I'm seeing that I like. So there's AMC. I don't even like trading MC. SGFY. You're really gapping up hard. Good morning.
Good morning. Good morning. I see that the market is gapping down.
Yeah. I sold my SARC for the time being.
So short of Cathy Wood, huh?
Cathy Wood, yeah. Okay, so Cigna Health soars, Amazon joining bid for the company. Okay, so I guess it's looking like there's a bidding war going on for this SGFY. So NVX looks like, yeah, I was going to say NVX kind of looks like lead balloon trade to me. So pops up maybe to the VWAP at the open. If it gets there, I'll probably short it. AMD is catching a bit of a bid at this point. Oxy still selling a little bit. XLE is dropping.
GCT is interesting too. What's the news on AMC?
I'm not really sure unless it's just the memes are getting beat up. I'm not sure. I have to take some UNG. I have to take some natural gas. Sell some.
Good morning, gentlemen.
Oh, good morning.
I just wanted to jump in quickly because we were talking about this earlier. It's complicated to type. So AMC is issuing a very special preferred share offering, which is a one-for-one deal for all AMC shareholders, but under a different ticker signal called APE, APE.
Ape. That's right.
So APE hasn't opened yet. It should open sometime today. In theory, it's a 2-for-1 stock split, which is why you're seeing AMC down. But it's not really a stock split because they're issuing the second share under a different ticker symbol. So the expectation is APE is going to open at the same price as AMC, and they should trade in tandem. Who knows what's really going to happen? This is a very unique type of situation. So just be aware. So that's why AMC is down 40% or something this morning in anticipation of the secondary offering. So that's what's going on.
Interesting. Yeah, I remember Ape. I didn't know how it all fit together. So thank you, Peter, for that.
They really put the ticker APE. Wow.
Yeah. Just shows you kind of market we're in.
So market is gapping down. AMD popped up. That's trades above the VWAP Q.
Yeah, Oxy continues to get weak into the open. ENVX getting weaker. Careful with the spread on ENVX. maybe it'll tighten up a bit. Apple and AMD are popping. They're I think we might pop here at the open. There's certainly Apple's taking up here, catching a bid. Oxy still dropping. All right, here we go. 10 seconds.
All right, 10 seconds to
Short a
open.
bit of Oxy.
Brian's short Oxy.
Yeah, just a little bit. See what it does. I shorted the ANVX. Oh boy. Okay. ANVX, I'm going to cover that here. It's just dropping so much. Oxy might pop here. Okay, Apple and AMD just dropped.
Q, yeah, Qs are. Let's see what they're doing. Potential. Looks like they're being bought back up. Qs.
I'm just adding to my Oxy short here at 69.20.
Get some long on AMD 94.40. See for 1 minute we can range break up. Qs are also popping. TQQ can also be good long. The pop of Qs. Let's see if we can get that. I'm long AMD 94.40.
Just covering some Oxy 68, 65.
Long TQQ as well, 33.88. Let's see if we can get long. AMD 95. Let's see if we can get that.
Okay, I'm out of ENVX. That was a severe drop, and I'm out of Oxy. I don't know if it's not going to drop some more.
AMD can
Oxy
pop
might.
up 95. That would be nice.
So it's
TQQ dropped.
I was going to say this pop might be something that Thor would short into.
We'll see. We'll see.
MVX turned around. Yeah, these lead balloon trades are a little more tricky for sure. Oxy's just being choppy.
I'm getting out of AMD. I got out of AMD. And I step out of
trading.
TQQ as well.
Nothing's trading very cleanly that I can see. Yeah, the Oxy's going to drop again.
Yeah, we did got a pop on AMD, but didn't sell on time. AMC, no shares for short. So what's the gap down for? Just the overall market weakness, or is it?
Yeah. Just, I don't know. Just overall market weakness.
Qs are now short. Looks like it. Market is gonna roll over. SQQ, he's hitting a scanner.
Long, yeah, I'm long SQQ.
Yeah, it's nice.
38.50. No, well, I'm chasing it a bit here. 38.50. This might be just a choppy market this morning too. That's the.
Are you still short on Oxy or no?
No, I covered that. I didn't like the way it. I got a profitable trade on it just by adding when it went back to the VWAP. Otherwise, it would have lost money.
SQQ, nice. I chase SQQ a little bit here. Long 38.55. AMD's short. NVIDIA. Qs are selling off.
And there we go. Oxy's finally going to break down here. Yeah, Apple's dropping. AMD's dropping.
Got out of SQQ more.
Yeah, yeah. I sold
Out of
some here
SQQ
at
completely.
38.
I'm not chasing it.
38. Yeah, I'm out 38.58. Still holding some. ENVX is looking like it wants to go higher. I don't want to chase it here though. It's too much chop.
Q is the reverse of Qs. So when the Qs are dropping, SQQ is going up. I'm out of it now. I might go continue lower, but